Welcome to Weekly Tax Update for January 16th, 2026. I've got a whole lot more information than I expected in this program, so let's get to work. As you know, you can take a look at the episode 109 logo. Verizon had a big nationwide outage. I should have added to this. There's $20 available. If you log into the Verizon app, somehow that $20 they think is going to, the equivalent of buying a number one at McDonald's is somehow going to make you a happy Verizon customer. But whatever, log right in and claim your $20. You have to proactively claim it. Maybe next week we'll mention the taxation of the Verizon payment. So this is me. If you need to find me, scan that QR code, populate my information into the phone. Always available for a chat or an email. Appreciate hearing from you. So as you know, this isn't as breaking as it was. Business returns mostly are eligible for e-file right now. They picked up on the 13th. There are a number of other returns which are not yet available. You can see them on the bottom. I did hear some stories about Form 1120S yesterday not going through. I didn't get an answer if there was either an ineligible form on it or their vendors. There was a big conversation going on in the CCH Access group. I didn't have a chance to go back today. Still breaking news, the 26th, IRS will start taking 1040 series returns. So you can start getting those signed, getting those lined up, set the expectation, make sure your clients know that it's the 26th. I don't expect to do any returns before like the middle of February anyway. But there you go. I won't go through the entire deck that I've been going through. Suffice it to say, if your Social Security number ends in 4, 5, or 6, your enrolled agent renewal is up January 31st. There's a lot more detail in the last 2 sessions, so you can go back on the YouTube channel and watch those. I like to give you an update of IRS processing times, and usually we have that by certainly the late afternoon, and I'm able to plug it in at 2 or 2:30 right before this program begins. As of 2:30, the IRS webpage still reads last updated January 9th. So I am unable to give you updated processing information since they just started federal business forms and 1040 series haven't started yet. I don't know how critical this is. Hopefully there won't be another shutdown in the next 2 weeks. But the following slides, of course, are last week's information. I won't review them, but that data is available here if you need to review it. And everything is flagged, of course, that it's as of last week's information. A lot of information. All right. The Disaster-Related Extension of Deadlines Act was signed into law right after Christmas. It was effective in January. We talked about it a little bit last week. If you're a subscriber to our continuing education programs, Jane Ryder did an absolutely excellent 2-hour program yesterday. She originally said to me, I think it's maybe an hour. And she went over the 2-hour limit. A lot of great content. Scan that QR code. It'll jump you right to the class. If you're not a subscriber, consider becoming one, or you can pay $79 for this a la carte program. The House passed this week the IRS appropriations bill for fiscal 2026. That's the year that started October 1st, 2025 and runs through September. Only the federal government can decide how much they're going to spend 3 or 4 months after the year has started. But Financial Services and General Government Appropriations Bill was approved by the House. They set the IRS funding at $11.2 billion. That's a reduction of another $1 billion from last year's numbers. I couldn't find this statistic, but I mean, we're funding the IRS at like the 1986 level, 89 level. It's just outrageous. This bill is going to allocate resources across 3 different operational areas, $5 billion to enforcement, $3 billion to services, $3.2 billion to operations support. This will give us an idea of their capacity over the next few years. Maybe we can get Bob Kerr to come on and give us some commentary about this. I'll see what I can do. So this tells us about the IRS's strategic choices, though. Enforcement is getting $5 billion at a time when they aren't prosecuting. Department of Justice isn't bringing tax cases. They don't seem to be out in full force auditing folks, but they're going to continue pursuing the compliance initiatives. We'll see. By the way, a $3 billion allocation to maintain the current level of service, despite having let go so many people. I don't know that that's going to be enough. We could go back to 2014 with calling every day and not getting through after an hour and a half, and then 30 minutes into your call, you got that famous courtesy disconnect. Hopefully that doesn't happen. So only the House signed the bill. You'll remember that the way this works, the Senate also needs to sign it and the president needs to approve it. So it's on its way to the Senate this next week for consideration, but there's a Senate is going on recess next week. Now that's kind of interesting. They just came back last week, but they're back on vacation. So January 30th is the deadline to get the appropriations passed. Interestingly enough, the continuing resolution ends January 30th to 31st. So they really need to move on this, and hopefully they do. Funding cuts threaten service levels. We know this. The reduced appropriations will probably extend hold times, or if they put money into e-services and other AI and automation as they promised, maybe not. We may get slower responses to correspondence. I can't imagine some of this stuff is at 6 months as it is. How quickly will the IRS address backlogs? You might remember right after the end of the last government shutdown, we talked about how the shutdown in 2017 had over 1 million paper documents the IRS was behind, and simply by increasing the amount they could touch by 20,000 a day, that was Commissioner Reddick's surge teams, they would only take them a year to dig out from the backlog. I haven't seen any numbers on where this backlog is, but you know there's stuff missing and otherwise backlogged. We still don't have Affordable Care Act tax extensions. I'll remind you that the Affordable Care Act of 2013 passed a couple of interesting things. It passed all of these credits available to folks who earn under 400% of the federal poverty limit, actually under 401%, and a sliding scale, you get some portion paid directly to either at the end of the year in a tax refund or paid during the year directly to the insurance company to help subsidize your premiums. 20 new taxes were passed to fund these things, one of which was kiboshed during the first Trump administration. That was the individual shared responsibility credit. But we still have 19 other taxes, most notably the additional 0.9% Medicare tax and the 3.8% NIT tax and 17 other little taxes. And these things fund these credits. So it's, as a taxpayer, it's outrageous that, well, however you feel about these things, the tax was made permanent and they're still going to collect it, yet they're not going to pay out the premiums. What are they going to do with that money if it doesn't go here? No one has said, oh, we're going to repeal those taxes and give you a further tax cut. So right now, this is creating other problems in the economy, and I think it's going to put a lot of pressure on the healthcare system, on emergency rooms. That ER in the pit already looks pretty bad. So if Noah Wiley has to take on any more patients, I don't know what he's going to do. But anyway, we said this bill has moved on to the Senate. Senate negotiations are hitting snags. No kidding. No final text has emerged that they're going to agree on. Some of the big points here relate to federal funding of abortion services, the Trump administration's other healthcare proposal that I'm going to cover in a minute, and certain political pressure from both sides. Don't give in all the way. Our country's founded on compromise. I don't know why they won't compromise. So they're going to continue to argue here, I guess, until we don't have anything. So the Trump administration has proposed the great healthcare plan because everything is great. So they're going to right now the premium tax credits are a subsidy to reduce marketplace insurance premium costs, based primarily on having less than 401% of the federal poverty limit and how many people live in your home. The Trump administration proposes that we're going to send these funds directly to people. My goodness, what could go wrong here? And they're going to purchase the insurance of their choice. How are we going to do this? Am I going to have to prove it? Am I going to bring in a 1095 B or C at the end of the year to reconcile it or to show it? I think this is going to be very interesting. Put more reporting on the insurance company, more reporting on us. Just think through the mechanism. It's hard enough to get a 1095A from these folks so that you can do the 8962. Can you imagine now if you need the 1095A to show how much advance they got, and then some other document from some random healthcare company that we're going to need to look up, make sure that they're have the right program, a company that's approved, etc. More work on us, more compliance work on us. I think there's going to be some problems here. So we're paying strict attention to what's going on here. However you feel about healthcare, I am opposed to more work for us. By the way, I don't think anything could be really wrong. None of us think anything is wrong about more people having access to healthcare and health insurance. So we're watching to see what happens here. So there's this Stronger Start for Working Families Act has been proposed by, ironically, bipartisan, by Senator Todd Young, who's a Republican from Indiana, and Maggie Hassan, somebody I had to look up to see where she was from, Democrat from New Hampshire. And what they're looking to do is expand the child tax credit refundability. So right now, you have to have at least $2,500 of earned income before any part of the child tax credit can be refunded. So there's a threshold, so the very lowest of people don't get the full or any refundable child tax credit. So if you think about this, I get a $2,200 per child tax credit. If my income is low enough, I have no federal income tax, I might not get full benefit of that credit. That's why the refundable child tax credit gives us back part of it. This is suggesting you would get the entire balance of the $2,200 per child. So this eliminates the earnings floor, allows families to begin getting these benefits as a refund starting with the first dollar of income. Estimates in this legislative update suggested that this will be a tax cut for 3.5 million working families. So it's going to increase their income. It's going to give them more money in their pockets. So hopefully that'll provide some relief there. I don't know at what cost. I didn't see anything from the Joint Committee on it yet. If we find something gets published, by all means, we're going to put that out to you. The proposal, though, is highlighting that the fundamental income threshold concepts in credit design are bad, right? We want to pull the earnings floor, allow people to get a more direct anti-poverty tool, get the money directly. You'll recall the Democrats, prior to the Trump administration, wanted to make the advanced child tax credit permanent because they counted that money that was landing in the households every month as an increase to income and calculated how many people were brought out of poverty. Studies have shown that if you get a larger refund at the end of the year, many folks who are living paycheck to paycheck are more likely to save it for some larger purchase versus the money being added to monthly household income is consumed, is spent. Argument is that's somehow better for the economy. And we're watching that law as well. So the IRS Advisory Council, IRSAC, came out with its annual recommendations list, presented it to Congress, and there are some interesting things. One of them is modernizing paper return processing, which I thought we were trying to get rid of. And guidance about bonus depreciation came out as well. So let's look at these things. So 6 points that came out of the IRS Advisory Council. Operational funding. They need more money. We know they need more money, more resources. Continuing its modernization momentum. I couldn't find my slide deck where Treasury Secretary Yellen in the past had talked about how many forms they wanted everyone to be able to do online, how much interaction you could have online. And they were actually like 9 out of 60, whatever they were looking to do. They had made some progress. IRSAC is also looking for to have more IRS education on the IRS's mission, right? Why are we here? What are they looking to do? Improve taxpayer understanding of the IRS roles and responsibilities. Well, they're on TikTok, they're on Instagram. They think the website should continue to improve with additional tools and other online account access. And the online accounts have been expanding. I think the biggest complaint practitioners have is that instant POA or immediate PO1A doesn't always work. It's problematic still. What are their last three of 6? So they would like to see Form 3115 procedures streamlined and that the processing delays are reduced. Remember, right now, in addition to e-filing it, you need to mail or maybe fax. I don't fax anymore. Everything we do, we send certified mail, electronic return receipt requested. You have to get that extra copy into Ogden. So maybe they're looking to do away with that. They would like digital filing and payment tools to be more accessible and intuitive. Of course, that's traditionally conflicted with security. You know, if you have your clients go to direct pay or into their portal to pay, they have to be able to at first they have to have set up the account. If they use their own portal, they have to understand the phone, the technology, and they have a lot of difficulty there. Direct pay requires information from a tax return. We all give people those 100-page PDFs, right, where their federal return starts somewhere around page 10 or 11. One thing that would be interesting is if the software did, or if we were required, software was required to create a verification page so that folks going to direct pay can have that page right on top, right? Here's what you need to be able to self-authenticate yourself on direct pay. Processing of Form 730 and excise tax payments. I think I meant 720. But I guess there's bottlenecks in specialized tax return workflows here. And they're seeing that's been reported from the field, and they're asking for that to happen. So another joint bill is House Ways and Means has legislation requiring that all tax returns filed on paper will have to have a barcode to streamline processing. Now, as an interesting note, when the IRS was looking to increase the number of e-filed returns, they did a pilot where they were requiring a barcode like on Form 940 or something, I think, if it was mailed in. And what they were doing is they were scanning the 940 and e-filing it to themselves, which increased the number, but it also increased accuracy in a number of things. So what we're looking to do here is say, if you're still too stubborn to use software or to e-file, you're gonna make it easier for us to process the return. So this is going on to the House for a floor vote. It's expected to be enacted, and it'll hopefully reduce manual data entry, less people to work, lower cost federal contracts, quicker processing of returns. So if you're relying on paper for amended returns or other things, the barcode it can't hurt, I guess, and we're not going to pay for it. The software vendors are. So bonus depreciation guidelines are out, and it's getting a little late to try and squeeze in one more program. But once we get through reading this, maybe we're going to need to. So Treasury and the IRS issued guidance for how to do bonus depreciation. If you remember, we've passed a bonus depreciation was phasing out. We were down to 40% this year. So now there is a retroactive increase back to January 19th to 100% bonus. You have a choice, 100 bonus, 40 bonus, and there's a bunch of transitional guidance built in here. Nothing's ever easy, right? So the notice confirms what property is eligible for bonus and which property isn't. We have interim guidance that we can rely on the existing regulations until they get final rules. This is sort of like CARES, the Secure Act 2, right? Yeah, don't worry about that yet. Then all of a sudden 2025 came and they're like, oh, everything's in full effect. So with those RMDs and things. So be careful with how that guidance works. And depending on how the wind blows, maybe some of our clients want to make those purchases sooner than later. Qualified sound recording productions are added as potentially eligible property. Taylor Swift will be pleased. That's all I can think about. All right. So although someone in Colorado called me and said they're going to a Bruno Mars concert in September, they bought tickets today for $200 tickets 9 months from now. And I said, aren't you a little bit old for Bruno Mars concerts? And the next thing I know, my phone call dropped. I mean, it must be another Verizon glitch. Anyway, so the new bonus depreciation guidance creates immediate planning opportunities that you should look at. Those with large capital expenditures may clearly benefit from this by reducing their income. You want to look at asset eligibility, how it impacts their cash flow. Does this make sense in that industry, especially your entertainers, where you probably haven't even thought of this before? Do they need to get a notification, an email or something from you? I know some clients that some practitioners, students here, all they do are entertainers. Be important to get this out. And of course, what's this going to do to book tax differences if you have accelerated depreciation? One thing I forgot to put in here that I'm seeing with planning issues when working with other practitioners and teaching some live events is everybody's doing two things. One, they're excited. I'm going to get that tax down or get that down to zero. Why is that a bad thing? I have a deduction which is worth anywhere from nothing to 37% or 39% even, depending on the year, depending on the other situations. So be careful. 10% and 12% tax brackets are beautiful things because that's the lowest price you're going to pay in tax on your income. And personally, I think with good planning, when there's 10 and 12, room in the 10 and 12% bracket that's meaningful, should you be using that? Exercise capital gains that will end up being taxed at a lower rate. Exercise IRA conversions to Roths that will be taxed at a lower rate. This is what planning is, not all of this software with the pretty graphs you guys want to buy. This is planning. So just change your mindset and think about, what can I do when the tax rate is only 10 or 12%? It's fabulous then. So without being political, I want to address Trump accounts here. We had a lot of talk on this online. I actually had to walk back a couple of comments regarding gift tax returns, which we won't touch today, just a little bit maybe. So I want to talk about what we're going to do in the office, because if you think about this, there's two things going on. Any child born in 2025, 2026, 2027, or 2028 is eligible for a $1,000 bonus from the federal government to fund this Trump account. Anyone under the age of 10 is going to be eligible for $250, courtesy of the Michael Dell Foundation or the Dell Family Foundation. That's a lot of money for free. But I don't want to explain this to every client who walks in the door. I have enough folks who say, I'll get back to you on that, whether they're going to mail in a check or do a direct deposit, a draft from the account, whether they're going to pay in full or need an installment agreement. I got enough stuff that lies here. So wherever I can, I want to push things out to pre-tax season or January. Wherever possible, I want to make a decision for them and let them opt out. They're going to have to opt out of this, because I'm going to give you the reasoning why. I don't understand why anyone would not want free money. Unless they, I don't know. So the primary thing here is to get the seed money from Trump, from the federal government and the Dell Foundation, $1,250. So these initiatives, I'm considering them, they're government and donor matching payments. So they're not going to be gifts of a future interest that your taxpayer needs to worry about. And this is the driver of whether we need to file a gift tax return. The answer is your clients don't. They don't. Now, we already mentioned $1,000 in the federal government. This $250 that was publicly announced, the Dell family has put up $6 billion with a B dollars to fund this. The way it works is any child under the age of 10 is going to be eligible for the $250. And potentially, some of the things I've read, including the release on the White House website, say that if they have less folks asking for the $250, there might be either more money for everybody under 10, or they might expand it beyond age 10. So why wouldn't you want the free money? The deposits are considered outside contributions. They're not parent gifts. They're not a gift for federal gift tax purposes that you need to worry about. Now, possibly, is the Dell money a gift? Yeah, but that's Dell's gift tax problem, right? The donor has to file the gift tax return if it's a domestic gift from a U.S. person. So here are some of the arguments. We've presented this to the staff, and we've made sure that everybody is ready in the event we need to make these discussions, these assumptions to folks. So the real value here is up to 18 years. It's free money. That's the real value. And then 18 years, up to 18 years of compound interest, compound earnings, not taxed. So if you assume an 8% annual growth, which is the number over since World War II, and it's take that over an 18-year period of time, birth through when they can first access this money, you can get an idea. So doing that, I gave you the math here to get the compound growth. It's basically 1.08 times 1.08 times 1.08. Where does that end up? And then the $250 grows to, so I'm sorry. So the original $1,000 grows to just shy of $4,000 potentially. The $250 grows to just shy, $999, just shy of $1,000. And that's just assuming average growth like in an index fund. It appears that you're not going to have a huge amount of choices, at least initially, in these funds. So that $1,250 can turn into almost $5,000. Now, what's the future value of $5,000? Not $5,000 today. I agree, but it's free. When you graduate high school and there's $5,000 to do something whatever you're looking to do, wherever you're looking to start, that's an amazing gift, I think. And I don't know why we wouldn't want to take that from folks, why we wouldn't accept that. Now, one of my concerns would be if you don't do this, you have to explain it to everybody, right? Do you want it? Do you not want it? If you don't explain it, first, you're going to have people come over the summer. I didn't get my $1,250. Everybody got a $1,250 refund because they're going to see that on TikTok. You know that's out there. So you have to roll it back and say, that's not how this works, but you're kind of right. So we need to explain it to everyone. I think you can put that out as an early email. And right now, you should have the ability to email everyone that you work with or text everyone that you work with, all your clients. We learned that during COVID. We haven't used a tool called Textalent, $25 a month. It's a fabulous tool. And we can notify everybody within a day, day and a half. Depends on the size of the outbound text group. But we've decided that we're going to opt everybody in. We're going to notify them they can opt out, but we're putting them in. So everybody who's eligible, has kids on the return, we are going to complete Form 4547 and do the form. If they would like to opt out, they've got to tell me in writing. An email is writing, but they got to tell me in writing, we don't want this. If it's a married couple, I'm going to ask that they both tell me so that they know that they're talking about it. And I'm going to save that document so that if later on I have to file the form for them later, I'm going to collect a fee. If they, I can just see when these kids turn 18. I can just see, 20 years from now. Were you born in 2025 to 2028 and your parents didn't secure you, your parents and their accountants and advisors did not secure you a Trump account? You might be due money. Please call the law firm of blah, blah, blah. I see it happening. So I don't want to be part of that. Right? All right. So the rationale here is why wouldn't we do this? I don't want to explain it to everybody. I don't want returns waiting. I don't want to go off on a tangent about, well, will it be any good? What can I invest? This, can I invest that? No. Here you go. We're putting you in this. We think it's a great thing. We're putting you in it. It's free money. All right. And this also reflects the fiduciary duty that we have to act in the client's best interests. Timing is critical. Let's make sure we do this. Obviously if the kid is born in 2025 or under the age of 10, they're going to qualify. We'll complete the form. Don't forget to ask if there's kids that live in the household but aren't dependents for one reason or another. You may have forgotten over the years that child exists. We're maintaining copies of all the emails and things that we do. We have an internal checklist that basically is, here are the points that you're seeing on this slide deck. Now, the whole discussion we had on Facebook, and I love it because there are folks that I never knew to be estate and gift tax experts or know these things, and their immediate reply when we said we were putting everybody into Trump accounts was something like, well, why would I want my client to have to file a gift tax return for that gift of a future interest you want them to take? Like, what? It is a gift of a future interest. Donna Byrne and I had a long talk. It's a gift of a future interest because they can't access it before they're 18 years old. It's their money, but it's going to be tied up until they're 18 with no ability to access it. So that's true. So right now we're going to sit on the side with respect to parent and family money. But the government money, not our problem, does not create a gift tax filing. We want to take that. Right? We want to take that money. So we want nobody making private deposits yet. Talk about that in a minute. So we're going to revisit. Oh, here we go. We're going to revisit that once the IRS releases guidance. So we're separating the decisions: elect and capture the money, and using this as an investment tool. I think even if you never put another dollar into it, it's free money. Take it. Now, if you look at 529 plans and ABLE accounts, both of those have a provision that says, even if this looks like a gift of a future interest, it's excluded from gift of a future interest. No gift tax return required if it's under, the exemption amount for a gift tax for that year and that donor. So I suspect, but can't say for certain, that we are going to see either a revision to the law or some sort of interim guidance that says, we really meant to do this and we didn't. Now, I haven't had a chance to read for this in the Joint Committee on Taxation, the Blue Book. I haven't had a chance to look at what they said. If you find things like that in there, you can really start to feel assured, So here's the messaging we're giving people. We're electing to, this would be something you might put in an email, a Facebook, a social media post, or even a text out to people, depending on how you talk to people. We're electing to capture available seed money while it's on the table. This represents outside funding. It may not be available if you wait. Think about COVID, man. They were all excited to get those PPP loans and that $1,000 from the SBA, man. They'll be all over this, trust me. We're going to tell people we don't recommend family deposits yet. I'm telling this to everybody. Why? People like my mother would be excited to go do this and surprise you with it, right? No, Mom, don't do that yet. If you don't want us to do this, you're going to do it later, whatever, notify me in writing now. Fine, happy to do that. Right, so I'm trying to keep explanations simple and focused. People don't, in my opinion, people don't read beyond a paragraph or two. No technical jargon. I hate the name Trump account. I'm hoping it becomes like 529 plans and 401k plans. We just use the code section. As an aside, I was in another class one day and I said, section 401, my favorite part. And the person says, it's like 50 people in the room, I'm just realizing 401k is a code section. And I just put my head down like this. She meant well. We're framing this as an opportunity to get free money. No advice, no anything other than free money. Why wouldn't you take it while it's there for your child, right? We think that there could be time sensitivity, especially with the Dell money. So we want all of these things in writing if they tell us no. It's not a debate. It's not about politics. It's about two sources of money that are free. Excuse me. All right, and there's a whole bunch of things here we could talk about. We're not live in a room. I'm not going to do some give and take with these things. But otherwise, I'd be very happy to do that. All right. So what are we doing here? Right now, we're getting organizers, intake forms, communications out. Depending on the type of your client base and when people start, my friend Mark has 20 appointments a day starting the 23rd, I think, or 22nd, until for the whole season, sitting there doing returns in front of people. So before that, you might want to get this information out. We've updated our engagement letter, by the way. So you probably want to go, if you have preparers in your office, you probably want to go back, do some quality control, make sure people haven't made any mistakes. pick 20 returns at random. Make sure all the dependents on the return are on a 4547, the eligible dependents. And then just make sure at the postseason, before time runs out, in case you need to amend, you want to hop on these and just maybe have everybody take a handful of returns and go through them. I understand, but haven't seen yet that similar to Form 8606 and Form 5329, there will be the ability to file this form on its own and e-file it. I have not seen that yet. I haven't seen it in my software vendor. I haven't seen it available on the IRS website yet, but I hear that's coming. Default to yes, capture the free money, don't put in the private contributions. That's it. That's what I'm saying to people, and simple messaging, please. So I did some work for you because I'm a really nice guy. So to help you do this, because them that can do, them that can't teach. Well, I really can't teach, but I can do this stuff pretty well. All right. I gave you a paragraph for an engagement letter opt-in language. Very standard language. It's so funny. We've been building an AI tool to look at your engagement letter, run it against a couple of textbooks, law school textbooks, and other resources, and tell you what's missing, what's there, and how to better structure it. In the short run, I don't have that working quite right, but when I need a section, I ask it to help me with a section, give it my general idea, and it does bang out something that appears to be very well done, very organized, very compliant. So there you go. It's available for you in just a moment. I have a longer form explanation and a shorter form explanation. Both are written to be client-facing with a good explanation of why we're doing this, what the opt-in is, and the same stuff I just took you through on the slide decks, why this is a good idea. So if you like that material, it's either on that link or you can scan the QR code. It'll take you to a Google Drive, which I've made available and open, right? So it's my Google Drive in my account. You only have access to this folder, and you can download those things. I think it's pretty powerful stuff. You can go back, watch the video, pause the video, and capture either one of these things. I should have, but didn't put the, there's a handout. So you can download the handout, and it's in the handout as well. So let's talk about the Child Tax Credit. And I know this is a longer program than normal. I apologize. So I will do high level here. So there's an issue with the 2025 Child Tax Credit. As you know, it's increased to $2,200. $1,700 of it is refundable. We've always had the issue that the Social Security number of the taxpayer had to be valid for work authorization, or had to be a Social Security number, not an ITIN. It had to be valid for work authorization. Either it couldn't, if it said not valid for work authorization without Homeland Security approval, DHS approval, INS approval, you just needed to show the work permit and you're all good. So the rules changed in 2025, and they are saying that the additional child tax credit is going to be considered a federal public benefit. And what this will mean is that starting in 2026, you're not going to be able to give these folks the credit if they or their children, the dependents, don't have a valid work permit. So we're seeing this online with a lot of folks that came here on United for Ukraine. It's costly to renew a visa, or if they went to one of the low-income taxpayer places that help. They're doing the adults first so they can keep them working and keep them getting paid. It's a scary time right now in this country, and you want to make sure you're compliant. So the children, either due to cost, weren't done yet, or due to the free resources being limited, they're doing the adults first, keeping them working. Well, the way this rule is written, if the children don't have their work permit, it's going to be considered a federal public benefit. They're not entitled to it, not eligible for it. Frank Agostino has written a 15-page document on this that a bunch of us reviewed the last couple of days, and he's getting ready to publish it. It'll circulate. Once he says go, I'll post it in all the usual places for you so you can read it. It's got checklists and a couple of other great things in it. So OBA, I don't know. Yeah, OBA is wrong. It's wrong there. The operational change here is that the taxpayer must now possess a work-eligible Social Security number, period. Married folks, at least one must meet the requirement, and the child work requirement, which was previously temporary, is now permanent law. So there are some seriously hard stops here for folks to be able to get the child tax credit as opposed to the other dependent credit. It's a lot of money on the table. $2,200 is the new child tax credit maximum, and it's indexed going forward. The additional child tax credit went from $1,400 refundable to $1,700 refundable. And as you saw earlier in the program, they're talking about even making that a $0 thing so that everybody would get the full additional child tax credit, even if they didn't get the earned income credit. So this is super important for folks that are on the lower end of the income spectrum. It's also become a complicated thing to explain to folks who may not speak English as a first language. So they're calling this the gate. You now have to have a work-eligible Social Security number. It's a prerequisite to credit eligibility. Now, if you remember, the House version, of all places, the House version of OBA originally was going to have a pre-certification portal for the earned income tax credit. So that did not come to be in the Senate version, which is the version of the bill we passed. But the federal government was looking to really clamp this down. Amazing that we're looking to give people money to help them, but we're going to make it harder and harder to access, however you feel about the credit. Married filing jointly, one of them has to have a work-eligible Social Security number. The other can have a Social Security number or an ITIN. It can be issued at any time. The other Social Security number has to be issued before you file the return, of course. Where both parents hold only an ITIN, they're going to be screened out of child tax credit eligibility entirely, even when the children are U.S. citizens, even with a valid Social Security number. So all sorts of considerations and planning issues here. This is not new, but the children need a work-eligible Social Security number that was issued by the time the return is due. This can include valid extensions. So the timing component here is going to offer a very crucial planning opportunity where you're going to tell people they want to file an extension, they want to hold the return. We see the IRS deny refunds this way all the time. Sometimes they're wrong, and we have to go argue, but they do enforce this. When the application is pending but not issued, you file the extension, and to preserve eligibility, you'll still have a timely return. The extension, of course, moves the due date to October 15th, which gives you that extra 6 months. When the child lacks the Social Security number but possesses the timely issued ITIN or ATIN, you want to look at whether they are eligible for the $500 dependent credit, and should you file for it. This doesn't work. The alternative credit doesn't require that they work. They get the money anyway. Social Security numbers can provide a meaningful tax benefit when they can't get the child tax credit. You want to evaluate the Social Security number, consider an extension if it's going to help them, and use the appropriate credit to get them the most amount of money available. There's 3 types of cards here, and I'm going to show you a diagram in a minute. Unrestricted Social Security number is the one that says nothing. It just has your name and your number on it. Not valid for employment. This states it can't be used for employment purposes at all. This is a hard stop here. This doesn't work. It will never qualify for the credit under any circumstances. Valid for work authorization with DHS authorization, Department of Homeland Security. It also said, I used to say INS approval, and I think it said something else at one point. So these require the work permit to be able to use them. So this came out of something Frank Agostino did. I did not proof it. It's all over all of a sudden because he posted it in 3 or 4 places. I think that if you're going to have anything available either on a desk or the employee desktop, putting this on there as a PDF is a great way to go. If you want the PDF, I should have thought to put it online for you. Email me, I'll send you this PDF. It's done in Google Notebook with a set of instructions, and it does a pretty good job for tracing how to get there, what to do. And as a reminder, there's I think, is it 650 or 635? Maybe last year it was 635. There's a substantial penalty for failure to follow these rules, failure to do your due diligence, and Circular 230 provides for the brother's keeper in section 10.36. 10.36 can give you the same penalty for failure to have a system in place to make sure your employees don't make these mistakes. So be careful here, please. All right, I won't bore you with the validity problem. I gave you a timeline here with a valid all year. December 31st with a valid. And then the filing date test. Authorization needs to be current when filing. That's a question we have. In other words, they have to have it the whole time, just 2025 or the whole time. The guidance currently doesn't resolve this. In other words, if I was compliant all year, let's say situations where I was compliant all year, my visa ends January 31st and I'm moving out of the country. So uncertainty here. I did qualify. I followed the law. I'm leaving your country. I was compliant last year. Shouldn't I get the money? We're waiting for guidance on this. Okay. I gave you a suggestive workflow here that I won't read to you, but basically for timing of the return, legend, you want to look at what's on that Social Security card and then do some follow-up questions. Now, 6695 of the Internal Revenue Code, Jason Dowtree pointed this out. 6695 does not say you need to see the card. You just need to know what it says. God, depending on how well you know the client and if they're truly understanding what you're asking, I might do that. Otherwise, I'd want to see the card personally. I just want to make super, super sure what we're doing here. I'm not going to keep a copy of it, but I do want to see it. And then where necessary, we're going to file extensions, which of course means explaining this to folks. Good Lord, you know. I'm not going to bore you here with where penalties live, but you have to do your due diligence. And sometimes a person who has incorrectly taken a credit will need to file a Form 8862. If they were previously disallowed due to a math error notice, they could have a 2-year or a 10-year suspension and need to file Form 8862. If they don't file it, let's say it's a new client to you and you, of course, ask them, it'll pop out, right? It'll reject, and you'll need to go back and do this. Right? Yeah, and as I said, the penalty is $635. Frank's diagram is wrong. So these things don't apply to 2025. They will, right now, qualify for 2026. It's very important for planning. Why is it important for planning? Just like you hopefully tell clients that have a 60-year-old child, by the way, your refund's going to be $2,200, $4,400 if they have twins, lower next year. You're going to tell people, look, right now, we see this problem. I don't want you to come in surprised. I don't want you to plan for this refund. You might lose this next year. So clients already have the expectation, at least some of them do, because of the way the PATH Act works. The PATH Act says they can't get refunds before around February 15th each year. So this of course, after the first year, clients have an expectation of when that money is coming. So you want to tell them in advance, make sure that they are not going to haunt you as you communicate the delay. Set it early, put it in your engagement letter, and then have a way to update status to people, right? Once they can do it, once the PATH Act, once it goes through. Now, for a lot of folks, you have the return signed, it's sitting here, you transmit it the day you can transmit it, but it's been transmitted. How are they going to know what their refund is? Well, they can go to the IRS website, they can go to the IRS app. I would encourage them to do that so they're not calling you, where's my refund? Where's my refund? Because they're going to misunderstand anyway, right? Whatever you tell them, they're going to misunderstand. We're running out of time here, but I do have a couple of examples of a parent with just an where they only have the ITIN. They can't claim the child tax credit or the additional child tax credit. They're only going to get the other dependent credit. If one parent has a social security number and a work permit, and they file a joint return, the family will qualify. The other spouse can, of course, use their ITIN if it's timely issued. Children's citizenship alone is starting in 2026 won't override the social security number requirement. Actually, that's true now. Won't override the social security requirement. Citizen children typically obtain work-eligible social security numbers. So that's always going to be from go. They're going to be qualified for the credit as a qualified child. If the parent has Department of Homeland Security restricted social security numbers, they have to have that valid authorization to work in order to get these credits. So each case is going to, your mileage may vary. Each case is going to be different, facts and circumstances, right? Big takeaways this year for this year. $2,200 child tax credit, $635 due diligence penalty for not documenting your process. Spouse social security numbers, at least one of the taxpayers' spouse or taxpayer or spouse needs to have a work eligible social security number or a U.S. citizen, right, where they have an unrestricted social security number. And as we said, 2026 is going to make these bigger changes. So you should continue your learning on this so that you best implement your practice. So what have I done for you? Next is what I've done for you. You can review IRS Topic M on the due diligence page of the website. It gives you the guidance. There's a small webinar there you can take. Get 1 CE for taking it. You might want to have your team take it. It's free. Consider if you work with a large number of folks who might fall into this, how do you need to change your workflows? Telling them in advance what to bring in, maybe telling them in advance things might take a little longer, be a little different. You want them to feel more comfortable when they come into your office. You probably want to train your employees with standard language so that you're telling everybody the same thing, the same way at the same time. And of course, you want to pay attention to what's going to happen in 2026 for next tax season. All right. So what have we done for you? Jason Dowtrey, who some of you know from social media, scares everybody with preparer due diligence. He's almost as bad as when Karen Hawkins was RPO director. But he's going to do a webinar for us. Now Jason represents taxpayers who have due diligence audits, or I'm sorry, people like us who have due diligence audits. He probably sees more than any 5 representatives I know because he's at these audits representing practitioners. So this is a free program to everybody because I'm a nice guy. Our regular platform Big Marker is full. So we are going to live stream the event across YouTube. This event is actually being live streamed across YouTube as well, just as a test. But you're going to be able to register. You have to go to YouTube Live. If you want CE, you need to register in advance. Probably register the day of the event if you have to. But that link or that QR code, either one, will take you to the registration page. It's free to CE, to IRS CE, to NASBA CPE, to Texas CPE, to CTAC credits. So happy to help. It's going to be ethics, right? But we're happy to help, and I hope you can enjoy us. You can join us. So thank you all for coming. I apologize for this being a little bit lengthier than normal, and I hope you got some value out of the program. If you have any feedback, please email me, john@taxpracticepro.com. I look forward to hearing from you. Everybody have a great weekend. All right, so there's some questions. If you stay on, I will hit the questions real quick. John, there are no handouts. Okay, I can handle that one. I'm pretty sure it's there, but unshare and share. So it should be there, Lynn. And if you're talking about the Trump stuff, you got to click the link and take that over to the Google Drive that I shared. Peter, I know this is not connected to the topic. I'm a CIA, moved my office. I'm trying to change the address in the ITIN unit, and I only have an email. No one is responding. Is that the place to change it, Peter? I would think that you, doesn't Atlanta administer that program? If you'd like, by all means, email me. I will get it to someone who I maybe can help you. The other choice would be to reach out to the taxpayer advocate or your stakeholder liaison, if you know who that is for your area. But email me. Tell me what area you're in. Email me, and I will see if I can get you some help, get you in the right direction. Laura, I know you. What dependents and kids do you auto-electing the Trump accounts? All of them for now, or just new 2025 and beyond? Anybody born in 2025? Anybody who exists in 2025 because of the Dell money? We're going to do it for everybody. Now, I guess if you wanted to do a little less work, your rule could be we're only auto-doing everybody who's a 2025 person, and we're notifying everybody else about the Dell money. I am concerned they're going to run out of it. How quick is it going to go? So I am going to do it for everybody. It shouldn't be that hard. I know Laura's cursing under her breath at me for saying that. Oh, handouts just showed up. Yeah, I sent them and unsent them. So I called. They only gave me an email. It's in Austin. So the same thing, Peter. Just email me. I'll see if I can get you some help. All right. And that's it on the questions. Let me look in the chat because sometimes you folks stick it in the wrong place. Oh, a couple of huge ones. Jeanette. Oh, she was emailing someone else. Oh, that's interesting. Henry asked, does the taxpayer with the Social Security number have to be listed first on the return? I don't know, but why wouldn't you, Henry? You know? Just my thought. You're welcome, Mila. Oh, June says CERT does not have the 4547 ready. That's interesting. Would be interesting to know. So I don't know. I could put a poll. We'll find out, June. I'll let you know. Everybody else, have a great weekend.